Gold enjoying a strong January. Can we expect it to spill over into February? We have Jeff Christian next. Jeffrey Christian, the managing partner of CPM Group, joins me now. Jeffrey, thanks so much for being with us.
It's good to be here.
So, Jeff, lots of activity this month for gold. We saw a lot of investor activity. People tend to rebalance their portfolios this month. We also heard rumblings that the Indian government may relax some of their tariff restrictions on the metal. What are you seeing for gold so far, Jeff?
Well, there's a series of things. One is Chinese buying in advance of the Lunar New Year. Another thing was that a lot of people, there is a seasonality to investment demand and also to jewelry demand coming in during January. You know, investors go away for the holidays. They think about what's happened in the previous year, and they come in and rebalance their portfolio. And we definitely saw some fresh buying from investors who were saying, okay, the stock market is very high and is vulnerable to the downside, which we've seen over the last couple of days. And precious metals are very low, and they could actually bounce up. We saw a very good response in terms of orders at Vincenzo d'Oro, which is the big gold jewelry and jewelry fair in Vicenza, Italy, last week. And we saw very strong demand, at least on volumes. As somebody said in Hong Kong, we're seeing a 20% increase in volume of gold demand in Hong Kong last week, but in dollar terms, it's up single digits because the gold price is lower. So we're seeing that. We're seeing demand from the Lunar New Year. You saw some speculative buying in anticipation that the Indian government was going to relax restrictions on gold importation. And so there were some speculators around the world, more in Europe and the United States, I think, than in India itself, buying gold in advance of any such announcement. And you saw some technical buying.
So all this said, Jeff, can the magic spill over into February for gold? I know CPM was projecting $1,320 for the metal come February. Are you sticking to this?
Well, we were saying February or March, and our view was that is more likely in late March than early February. You could see some follow-through buying in early February. If the price gets over $1,280 again, as it did, I think, about a week ago, you could see some fresh buying and some short covering take it up to $1,320 on a very brief basis. But we think we've probably seen the high in January, around $1,280, $1,290, and the price is more likely to come back off. We do think that we'll see $1,320, but it's probably more likely late March than early February.
Jeff, let's talk emerging markets now. Argentina becoming the epicenter, I guess we could say, of the turmoil we're seeing in the emerging markets, with their currency plummeting 20% in January. Could we see this spill over into the developed markets such as the U.S.? What are your thoughts on this crisis?
I think it's part of what we're expecting to see on a global economy basis. I'm not even sure that I would call it a crisis, although I'm sure the Argentines see it as a crisis. There could be some spillover effect. Developed country governments and monetary authorities are suggesting that the emerging markets need to hike their interest rates in order to support their currencies. I'm not sure that that really solves the problem. And I think that one of the things you'll see over the next several months and really over the course of 2014 is this ongoing dealing with the international monetary system and the fact that you do have these large imbalances, which have actually gotten worse in terms of debtor nations versus creditor nations, and it all still needs to be resolved, and it still is largely unresolved and undealt with. So I think that you will see problems more so in Europe than the United States or Canada or Japan, and I think you will see pressures towards some increase in interest rates, more so in Europe than in Japan or the United States. But I think it's just going to be sort of this rumbling underneath the surface. I don't think it'll be a full-blown crisis.
So is this a perfect time for gold to act as a hedge against the devaluations of these currencies, Jeff?
Well, in Argentina, it's probably too late to buy gold now because you've already seen it, but you're probably seeing gold purchases around the world. If you go back to 1997 with the Asian debt crisis, when the currencies plunged in Southeast Asia, those people who had gold survived that, and in fact, did very well, in some cases buying companies off of people who did not have gold when the Thai baht fell 80% or something like that. And I think that, while this is different from what went on in Asia in 1997, the memory is there, and people understand that having gold and silver in your portfolio is a good protection from exactly this kind of chaos.
Finally, Jeff, credit crunch worries in China. Is it a reality? Concerns about a credit crunch emerged after Citibank's local website posted a notice that fund transfers of both dollars and won would be delayed. Are you concerned?
We're not really concerned. I'm not sure if it was in private or in public, but someone from the Chinese government recently said to me, anybody who's really concerned about a hard landing in China just doesn't understand the Chinese economy. The Chinese are trying to keep inflation from coming back. They've squeezed it out of their economy to some extent. They're worried about speculative excesses in various sectors of their economy. They are tightening credit to some extent, but I think that they will probably manage the conditions pretty well, with a give and a take, and slowly trying to get the excesses out of their economy. So I'm not particularly worried about a full-blown credit crisis. Now, that said, I think the gold market will be supported from time to time by people in the West worried about a Chinese credit crisis.
Excellent thoughts, Jeff. Thanks so much for taking the time.
It's always a pleasure.
And thanks for watching this edition of Commodities Confidential with Jeffrey Christian. You can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Camboni. Thanks for watching.